So welcome back to another episode of Multifamily AP 360. And today's our guest is Mark Podolsky. Welcome, Mark.
Rama, thanks so much for having me.
Yeah, sure. And thank you very much, Mark. And little bit about Mark. Mark, known as the Land Geek, is raw land investing expert, educator, and host of the Art of Passive Income podcast. After starting with just 3,000, he has completed over 6,000 land deals and built a scalable automated business focused on passive income and financial freedom. Mark is the author of Dirt Rich and the creator of a proven system that helps investors escape solo economic dependency by building predictable location independent income through land investing. So, with that, Mark, you want to add anything to your background?
Yeah, I just really, my mission is very simple, and it's to help people get out of what I call solo economic dependency, which means if they're not working, they're not making any money. And so I think there's lots of ways to solve our money problems, but I'm very interested in solving not just my money problems, but solving my time problems. And that's why I love doing what I do, because it solves both problems.
Awesome. Awesome. Thank you. So your journey started with 3,000 and no real estate experience. How did those early land deals shape your philosophy on risk, discipline, and long-term wealth creation?
So I was a miserable, micromanaged 45-minute commute to work and back investment banker, specializing in mergers and acquisitions. And Ram, it got so bad for me. I wouldn't get the Sunday blues, anticipating Monday coming around. I'd get the Friday blues, anticipating the weekend going by really fast and having to be back at work on Monday. And so I met this guy, and he's telling me that as a side hustle, he's buying up raw land, pennies on the dollar, and he's flipping them online. He's making a 300% return on his investment. So I don't believe him. So I have $3,000 saved up for car repairs. And I go with him to New Mexico. And I do literally exactly what he tells me to do. So I buy 10 half-acre parcels, an average price of $300 each. And then I flip them and they sell for an average price of $1,200 each, 300%. It worked. So I took all that money and went to another auction where I live in Arizona. And it's 2,000. There's no one in the room. I'm buying lots and acreage for nothing. And I made over $90,000 cash on that deal. So I go to my wife and she's pregnant. I said, honey, I'm going to quit my job and become a full-time land investor. And she says, absolutely not. So I said, so it took 18 months for the land investing income to exceed the investment banking income. And then I quit. And so I've been doing it full-time ever since. So to answer the question, I had to test the theory, number one, that what this guy is telling me, number one, is actually true because I didn't believe him. I'm looking at companies all day long, and a great company, great, had 15% EBITDA margins or free cash flow. Average company is 10%. And I'm looking at companies all day long, less than 10%. So one, I had to validate the idea. Number two, I had to make sure that it was a repeatable process before I would quit my job. So I'm mitigating risk. And then once I got to the point where, oh, this is better than my day job, then I quit. So if you're young and you're in your 20s and you can live on ramen and you have no dependents, I think absolutely you can take more risk and you can go for it. But if you're like I was 30 and I had a baby on the way and I had a wife who didn't work, I had dependents. So I couldn't just quit my job because emotionally I wasn't fulfilled. But I think that the value of it was that I had this burning desire to create a better life for myself.
Awesome. Awesome. Thank you. So you talk about solo economic dependency. How do you help people shift from a labor for income mindset to a sustainable passive income model? And what is the biggest psychological barrier in the transformation?
I think the biggest psychological barrier in any type of transformation is, I think there's two. I think the first one is embracing the suck. So if you have a job, you're probably really good at that job. And now in order to get this goal of freedom, you're going to have to suck at a bunch of things in the beginning. Do you have the grit? Do you have the persistence to go through that part long enough before you have competence? And that's psychologically very difficult in the sense that I think about working out. Like Rama, if you and I are both out of shape, and all of a sudden we think to ourselves, we're going to get in shape in a month. It's going to be really hard that first month. And there's going to be a lot of pain. And there's going to be days we don't feel like taking that pain. But could we sustain it long enough to go through the painful part? We're like, oh, wait, I'm actually not in so much pain anymore. And I can continue doing it. So I think that's the first psychological barrier, is just embracing the suck. And then I think the second psychological barrier is the uncertainty of entrepreneurship. If you have a job, you have a KPI, you have an OKR, you know, you have a good job, you know clearly how to win. And this is how I win. And I'm going to get compensated this way. When you're an entrepreneur, no one's telling you what to do every day. You have to do it, and you have to deal with that uncertainty. And psychologically, that's a very difficult shift to handle. And so, can you again sustain that feeling of uncertainty and discomfort long enough to understand the 80-20 rule of, if these are the 20% of the activities I need to do every day, that will move 80% of the business forward?
Awesome. Thank you. That's a nice way of saying. Yep. With 6,000 plus raw land deals under your belt, what are the most consistent indicators you use today to evaluate whether a land parcel is truly worth investing in?
We have a due diligence process. But for me, Ram, do you want to zoom back? Let me just walk you through the model.
Yeah.
Will that help?
Yeah, absolutely.
Okay, so you were in Greensboro, South Carolina. But let's
North,
assume that what's that?
North Carolina.
North Carolina, Greensboro, North Carolina, I'm sorry, North Carolina. But let's
Yeah.
assume that you own 5 acres of raw land where I live in Arizona.
Yeah.
And let's say that you owe $200 in back taxes. So you're advertising two important things to me. Number one, you have no emotional attachment to that raw land. You're in North Carolina, the property's in Arizona. And number two, you're distressed financially in some weird way. Because when we don't pay for things like our property taxes, we don't value that asset in the same way. As a result, the county treasurer keeps sending you notices saying, Ram, if you don't pay your property taxes, you're going to lose that parcel to a tax deed or a tax lien investor. So all I'm going to do is look at the comparable sales on your 5 acre parcel for the last 12 to 18 months. I'm going to take the lowest comparable sale. Let's say it's $10,000. I'm going to divide by 4. That's going to get me what Warren Buffett would call a 300% margin of safety. So I'll send you an offer for $2,500. Now you accept it. Why? Because for you, $2,500 is better than nothing. In reality, 3 to 5% of people accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you still own the property. I have to confirm that the back taxes are only $200. I have to make sure there's no breaks in the chain of title, no liens or encumbrances. And so I outsource that due diligence work to my team in Jamaica. They're connected to an American title company. It costs about $11. Now, if I was investing in more than, say, $5,000, I would just close directly with, traditionally through a title company, and they would create that preliminary title report for me. So let's assume, though, and most of the time it checks out, everything checks out during due diligence. Now I send you a check for $2,300. I send the treasurer a check for $200. I own it free and clear. Now, Rama, I'm going to sell it 30 days or less. And I'm going to make it cash flow like a rental home. So I have a built-in best buyer. Do you know who it is?
No.
The neighbors, the neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy, protect your views, know your neighbor. So oftentimes the neighbors will buy. If they pass, I'll go to my buyers list. The buyers list passes, I go to a little website you may have heard of. There's 2 billion people on it every day called Meta, or Facebook buy-sell groups in the marketplace. And then I'll go to the lands Land.com, landmodo.com, landandfarm.com, landwatch.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land every day. But the secret is in my pricing. So all I'm going to ask for is a $2,500 down payment, and then I'll make it a car payment, say $329 a month at 9% interest for the next 60 months. So I get my money out on the down payment. I could go 6 to 10 months out, and then I'm getting $329 a month at 9% interest. Rama, no tenants, no toilets, no termites, no trash. And because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, all this onerous real estate legislation. And so then it's a simple game. Can I create enough land notes where my passive income exceeds my fixed expenses? And then I'm working because I want to, not because I have to.
Awesome. Thank you very much. And systems and automations are central to your, teach or your investing, right? So what are the key systems that separate a land investing hobby from a scalable passive income business?
You have to have 3 levers to pull. The first lever is going to be other people's time. So inexpensive virtual assistants. And you can find them in Jamaica, you can find them in the Philippines. There's already people trained on this land model. They're not hard to find. That's the first lever. The second lever is software and automation. So I use on the front end a CRM or a customer relationship management software system called lgpass.com. And I created it. And then I have on the back end a set it and forget it payment system to manage my notes. That's called geekpay.io. And so with those 2 software programs and the inexpensive virtual assistants, I'm 90% automated. The third lever for scale is other people's money. Once I've gotten to a point of competence or even complete confidence, then I will go out and show an investor, this is what I'm doing. Here's how we can make money together.
Got it. Got it. So what kind of price ranges you're targeting?
What type of,
What price ranges of land parcels you're targeting?
oh yeah. So I don't care. As long as I'm buying at 25, 35 cents the dollar, I'm making my money on the buy. So if it's $1 million, great. If it's $5,000, great. I'd say if you're starting out, have a budget of be able to buy 5 to 7 parcels. So if your budget is say $10,000, you can do the math. So 5 parcels, right? You can buy 5 $2,000 acre parcels. If you have less, if you have $5,000, you can buy $5,000 acre parcels. So we see there is inexpensive rural land you could pick up today for $500.
Got it. So you have any preferred markets?
Yes. So Rama, let's be honest. Nobody wakes up and thinks to themselves, boy, I'd like some raw land today in Iowa, unless you live in Iowa. So we want to go to the Sunshine States, Arizona, New Mexico, Colorado, Texas, parts of California, Washington, Oregon, parts of the Northwest, Florida, treed areas in the Midwest, Missouri, Arkansas, Tennessee. We want to be in fast-growing states where there's just a very large amount of inexpensive rural land to be available.
Any others, any other specific reasons other than what you mentioned?
Because there's inexpensive land. It's if I live in a rural area that has terrible weather, I want to be in the Sunshine State. I want to be in a fast-growing area as an investor. And I also want to be in an area that I know is not going to have any environmental issues. So I want to avoid the Northeast, Pennsylvania, Ohio, New Jersey, manufacturing where they could be dumping and polluting my land. You could go to a website like EPA.gov to make sure you're not in a Superfund site during your due diligence. But for the most part, those areas are not as attractive as somebody buying in, say, Florida, where these are fast-growing cities, fast-growing areas.
Got it. So, looking at rural economics and land demand shifts, what macro trends or and also micro trends do you think most land investors are overlooked right now, and why do they matter?
From a macro trend, I have one
Macro
word
and
for you.
micro. Yeah,
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 the macro trend is one word,
yeah.
Starlink. Starlink is a big deal where it used to be you'd have to be in an urban area where your big telephone company had these big cell towers and you could be on the internet. Today, with Starlink, you can go and you can put a home in a rural area. You can go with solar. You can even truck in your water and you can have internet. And if you're one of those people that can work from anywhere, which most of us are now because of COVID, you don't have to go into an office. You can get a very reasonably priced piece of rural land not too far from the nearest city. And so from a macro economic perspective, that rural land, we're going to have supply demand issue where we're going to have a higher demand for that inexpensive rural land than we have today. So and that is going to be in our favor. The micro trend is inflation. In an inflationary environment, scarce resources, gold, silver, land continue to go up in value because cash is being eaten. The value of cash is being eaten up by inflation. So the micro trend and the macro trend are in our favor.
Got it. Got it. So, would you share any of your best land investing experience so far?
The best land experience I've had so far, I've had a lot, but early on, I I did a deal with a public company, and they had all this rural land in Nevada. And I went to them, and I was buying 640 acre sections. I said, "Sell me your cheapest sections." And they said, "Okay, we'll sell this to you for $30 an acre." I said, "Great." So I bought 640 acres for $30 an acre. I sold it for $500 an acre. And then they saw what I was doing. They started raising the price to like the $50 an acre. And I still kept selling it for $500 an acre. Over 5 years, I made over $5 million on one deal.
15 times. Yeah.
Yeah,
15 times.
15
Awesome.
times.
Yeah. Would you also share any challenging experience?
The most challenging experience I have was in an area of Western Pennsylvania called Treasure Lake near Penn State. And it was a beautiful area, $1 million homes, gated community, two PGA rated golf courses, three lakes, a restaurant. I fell in love with it. But they had property owners association fees with these rural undeveloped lots. And so people stopped paying their POA fees. And so the county put a lien on those lots. Once they got a lien on their lots, they started paying taxes. So I fly in there with my suit and I say, "Look, you've got all this dead money and I'm going to resurrect it. So while I own these lots, you are going to give me a tax abatement and a POA fee abatement." And you would think, "Oh, this is a great deal, Mark. We'll do it." This is in 2005. So no, they were scared because the golfers, who's going to buy these lots? Our golf course is going to get filled up. And the boaters, who's going to be on our lakes now? The and so I had to deal with the politics of a community. Finally, I convinced them in 2007 to give me 1,000 lots. And I bought them at $50 a lot. I started selling them. I made over $100,000. And then the Great Recession hit in 2008. I couldn't sell any more lots. I had to give them back. And it was the first time in business I couldn't keep my promise. And when I factored in my time of flying back and forth to that development, I broke even on that deal.
Got it. Yeah. Thank you for sharing that. Many people hear passive income and assume minimal effort. What is the most misunderstood aspect of passive income in land investing that you wish more people understood before they start?
Yeah, passive income is one of those great marketing terms. And people think, "Oh, it's passive. I don't have to do anything." Even if you inherit $1 billion, you still have to do something with that money. So to me, passive means set up something one time, and then it continues to provide a benefit to you without you having to do as much as it was the first time. That's how I define passive. Technically speaking, there is nothing passive. So I think that's just a bad marketing term. But I do think that you can set up a machine. I do think you can leverage other people's time and software and automation to have total freedom in this business. I work about 2 hours a week in my business, but I still have to work. I still have to show up. I still have to look at the numbers. I still have to manage and be the CEO and find ways to improve it. So, in that sense, it's not 100% passive. And again, I would argue that nothing is 100% passive. But just like in a multifamily building, once you buy that building, you increase the rents, it's fairly passive in that sense. But of course, you still have to look at your statements. You still have to raise rents. You still have to deal with managers. There's still going to be some work involved, but it will be less work and you'll have a higher hourly rate than you would if you had a W-2 or a lot of what I call solopreneurs who feel like they have a business, but it's just a better job than the one they had.
Thank you. Thank you again. So would you share a little bit more about your book, Dirt Rich?
Yeah, so Dirt Rich tells my story. Hopefully, you don't make the same mistakes I did. I talk about it in the book. And it also goes into much more detail on the model, and you can dip your toe in the water and start doing it for yourself.
Awesome. Awesome. Thank you. What's your take on current market challenges and how exactly it will impact land investment?
I don't see any challenges in my market because it's just a massive market. And that's why I teach what I do, because there's billions of acres of raw land available. There's no private equity groups. There's no hedge funds. There's no big money in this space. So it's a very small cottage industry. It's also the most boring of the real estate niches. If you go to a RIA meeting, a real estate investment association meeting, 100 people in the room, 99 of them will be wholesalers, landlords, and flippers. So you and I would be the only land guys. So I think that the trend will be that this niche will continue to grow, continue to prosper, and there's plenty of opportunity.
Got it. Thank you. So would you share a little bit more about financing side, how exactly financing works for land deals? Do you
Yes,
actually access? Yeah, go ahead.
we use geekpay.io to create the note. We use a promissory note, a purchase sale agreement, and a land sale contract to legally create that note. And then the borrower simply fills out their ACH information, their account number, routing number, and then it automatically gets deposited into your account every single month. If they don't make a payment, we use a land sale contract, which means there's no cost of foreclosure, and they have 30 days to cure their default. If they don't cure their default, you keep the down payment, you keep the monthly payments, it lowers your cost basis, and you do it again. It extends out your ROI.
So do you do any kind of entitlements and also those kind of stuff?
No, just
Yes.
very simple. 80% of developers go under. Why take the risk?
Got it. And what are the typical timelines from buying to assigning or selling to other buyers?
It depends on you and your marketing skills. So I would say if you haven't sold that property in 30 days, something has to change. Maybe your headline has to change. Maybe the down payment has to change. Maybe the price is too low and people are like, what's wrong with this property? Maybe you have to raise your price. Maybe you have to lower your price, but something has to change. So if it hasn't sold in 30 days, I change some element in that ad.
Got it. Got it. Thank you. So let's shift towards personal side. Any habits, any personal habits that are helping you to be successful?
Yeah, meditation. I think that I want to be a duck. So if you watch a duck on the lake, they're calm and peaceful above the water, but they're fiercely paddling below. And so I think that habit allows me to joyfully run multiple businesses. And I think that's that skill, if I had it earlier on, to be aware that I'm not my thoughts, I'm not my feelings. Everything comes and goes. It's like riding on water. It's not personal. I could have gone through the ups and downs of business much more peacefully and joyfully than I do, than I can today.
Thank you. Nice analogy. Thank you. Any books that impacted you?
Yeah, The Second Mountain by David Brooks is a great book. If there's the first mountain is egoic. So when you're young, you do what culture tells you to do. You get a good education, you get a good job, you buy the stuff, you get the house, you get the cars, you go on the vacations, and you get up to the top of that mountain if you're lucky, and you realize, oh my gosh, this isn't satisfying. And then you go to the second mountain. And the second mountain is other focused. It's about your community. It's about vocation. It's about your relationships and love and intimacy. And it's about your spirituality and your faith. It is a harder mountain to climb, but a much more worthy mountain, an enjoyable mountain.
Sure. Yeah. Thank you very much. And how can listeners can connect with you, Mark?
The best place to go is thelandgeek.com. And again, we have a link for them to get Dirt Rich for free. Just pay shipping.
Awesome. And thank you very much, Mark.
Thanks, Rama. Appreciate it.
Yeah, sure.